I'm going to show you guys the exact swing trading strategy that I use personally on the SPY, but also you can use this exact concept to look for, very, very, very tight entries when day trading. So the concept, guys, is all around fair value gaps. Okay, there's this huge phenomenon right now in the trading world around ICT, fair value gaps, big money trading, all this stuff. So many people are using this on really, really small time frames for day trading. 1 minute, 2 minute, you name it, 5 minute. For me, that's just not my style. But I've been able to use those exact same concepts on swing trading. Okay. And so that's what I want to show you today is how to find these really, really key levels to swing trade. Or again, like I said, you can use these same levels to be aware of possible reversal situations so you can get, nail really, really good day trading setups as well. So to start, guys, what is a fair value gap? It's price action indicating an imbalance in the market. Okay. Big money hates these. They want these imbalances filled. Okay, there's very big liquidity into these moves, and so that's where big money can fill their shares, fill their contracts, you name it. It's formed when 3 consecutive candles, the first candle, the wick is not overlapping with the third, which means there's a gap on this second candle. Okay, and so I'll explain this here with this one. So we'll go to a 1 hour chart. So right here, you can see here's candle 1, here's candle 2, here's candle 3. There's this wick is not touching this one. Here's your fair value gap. Okay, you can see we pop back up, we fill this. This is no longer a fair value gap. Okay, it got filled. It's no longer a thing. Okay, then we go again. Where's the next big move? Right here. Okay, here's candle 1, candle 2, here's 3. So here's the wick, here's this one. You can see fair value gap right here. Okay, there's another one here. And so don't get confused though, guys. Don't think this one closed, there's one here as well. There is, but if this gap is still here, this means this is one big gap. Okay, this isn't 2 separate gaps, right? The first gap still isn't filled. So this is one huge gap, meaning up here is where you have to get back to get filled. And so again, what we're looking for is for this to get filled over the course of the next few days. And I'll show you kind of more in detail what that's going to look like. So the steps to swing trade this or how to find these levels. Number 1 is we want to see large moves on a 1 hour time frame or a 30-minute time frame on the SPY. So we're just going to start here, guys. I'm just starting back basically for the last month of August. Okay. Again, here you can see there was your first gap. Once we filled it, this actually was a really good rejection point, for a big move down. But here we go. Big volume, big move. That's the first thing. We want to see big volume, big move. Okay, we draw our fair value gap. Now, what we're looking for over the course of the next couple days is for us to fill that gap. If we fill that gap, okay, we are looking for this price or as close to this price as possible, right here, the low of the first candle, and then we'll just risk the high of this candle. So entry will be here. Once we get there, stop would be up here. Again, this is for a swing trade. This one would be for a short, because what we're seeing here is big volume comes in. We're going to see, that get filled, and then we want to see a reversal back down. So we go, okay, boom, here we go. You can just either enter upon this or you can wait for a sign of reversal intraday. Once you get that sign of reversal, there you go. Let's enter it. Okay, first target is the last swing high or the swing low. That's what we're looking for. Okay, so again, watch for large moves, increase in volume, define your fair value gap, wait for this to get filled. Once you get filled, wait for a reversal sign. We get volume to flow in on a smaller time frame. That's where we want to enter. We're going to risk the high of that initial 1 hour candle, like I just said. We're going to play contracts roughly 2 weeks to 1 month out. Strike price will be the initial target. Okay, so initial target's down here, meaning our strike price, I'm not trading, again, here, guys, I'm not trading, don't be robotic. I'm not trading a 451 contract. I'm going to trade the 450. There's going to be way more volume, way more liquidity in that one. So that's what I want to see. That's my first target. And see, nothing happens here day one. Don't really get a move that I like. Day two, still nothing. Still nothing. And then finally, here we go. You can see we get our big crash. This is 4 days later, you know, but here we go. There's 451. Boom, target hit. Okay, so let's do another one. And again, all this in here, there's no big volume, there's no big moves. There's not fair value gaps I'm really interested in. Okay, so the next one being, you know, where we get a big move. No big moves. Okay, so right here's our next big move. There's our gap, right? From right here to right here. Here's candle one, here's candle two, here's candle three. These wicks don't overlap. There's our fair value gap. I'm not doing this in pre-market either, guys. I'm just doing this during actual trading hours. So what do we want to see? Over the course of the next couple of days, we want to see this get filled. Once this gets filled, we'll look for an entry. There we go. There we go. Right? Filled. Wait for the reversal. Again, target down here, 448. Again, in this situation, whatever the contracts with the highest volume are, that's what I'd be looking to trade. Look to take profits down into this. Okay, so again, we're entering up here. Again, you can just enter this. You know, we would have been risking to here, or wait for a reversal on, like I said, a 15-minute, 5-minute time frame, and enter it based upon that. Okay, again, you can get really, really good entries with these for day trades as well and trend reversals. Target down into here. Okay, let's just do another one. Big moves. Where are the big moves happening? Okay, right here. Again, big move. All right, so we'll go to this one now. Again, right here. Now we're just going to wait for it to get filled. So not quite filled here. Again, sometimes you can be more aggressive, but normally these like to fill. So didn't get filled. Really nothing here still. This could possibly be one to the long side right here. We do have a little gap, so we'll keep this on watch. Not a huge volume, though, you can see in this move, just pretty light. But so now if we came to the downside, could be interested in filling that one. So there we go. Here's a reversal. Long. Still nothing. There we go. Fill. Here we go. We filled this last one. We enter. Massive dump down into target one. Again, here's the next fair value gap. Wait till it gets filled. Here we go. We get filled right here. 449 and dump city. Okay, now we get another one right. Yeah, this one got filled, so that's not one. Okay, right here. Here's fair value gap. You can see there was one right here as well, but we filled it. Next one's right here. Again, volume to the downside, gap from here to here. We fill it in the morning, look for an entry, swing her down. There's our next fair value gap. Again, here's candle one. Wick here. Here's a gap. See right here. Fill it. Dump out in the morning. And then reverse. Okay, so this again, this would have probably been a small win or a break-even trade. You would have been up really nice here. Now we get this next fair value gap here to the long side. Again, guys, it's just on repeat. Once they're filled, they're irrelevant. Okay. Now we go up. We get filled right here. Get long. Boom. Huge move to the high side. Right. So right here's your fill. Get filled. Swing it. Big move. So again, guys, just in review, don't overcomplicate it. Keep it simple, but just it's an imbalance. Big money wants to fill. That's all we're looking for. Okay. Watch it on a large time frame, 1 hour, 30-minute. You want to see an increase in volume and big move there. Look for that fair value gap, mark it up. It may take 1 day, it may take 5 days. You know, normally I'd say it's like 1 to 3 days to get filled. Once you're there, go to a small time frame, look for a reversal, boom, let's enter it. You know, and you can trade contracts, you could trade futures, you could just trade the equity on it itself, you could trade SPXL and SPXU. It doesn't really matter what you're trading. It's the same concept. So hopefully this helps, guys. Again, reach out with any questions at all, and we'll look forward to kind of expanding upon this as we go forward.